Welcome to this week's episode of Market Pulse Weekly. I'm FX Videos, and if you've been watching the stock market, you know we've had a week packed with action. From earnings reports shaking up tech stocks to the Fed's latest comments stirring investor sentiment, we've got a lot to break down. Plus, I'll be giving you a forecast for what to expect next week, so make sure you stay tuned. Let's start with a rundown of what happened in the market this week. The major indices. The S&P 500 closed the week with a slight gain of X%, extending its recent rally. The Dow Jones followed suit, while the Nasdaq saw some volatility thanks to mixed earnings from major tech firms. Overall, investor sentiment remained cautiously optimistic as economic data came in stronger than expected. Earnings season continues. This week was all about corporate earnings. Big names like Apple, Microsoft, and Tesla reported, and their results sent ripples through the market. Apple's revenue came in higher than expected, pushing its stock up by X%, while Tesla's report was a mixed bag, with declining margins offsetting stronger deliveries. Federal Reserve and interest rates. Fed Chair Jerome Powell spoke midweek, and while he didn't say anything shocking, markets reacted to his tone. Investors are still debating whether the Fed will cut rates in Q2 or hold off until later in the year. The latest inflation data came in slightly higher than expected, putting some pressure on rate cut expectations. Sector highlights. Tech, strong earnings from AI-driven companies kept the sector buzzing. Nvidia and AMD continued to lead the charge, while chipmakers saw some profit-taking. Energy. Oil prices rose after geopolitical tensions in the Middle East escalated, pushing energy stocks higher. Financials. Banks remained stable, with JP Morgan and Goldman Sachs posting solid results, but regional banks struggled amid ongoing commercial real estate concerns. This week, we saw a couple of key economic reports that shaped market movement. Jobs report. The labor market remained strong, with unemployment still hovering near historic lows. However, wage growth is slowing, which could give the Fed some breathing room on rate decisions. GDP growth. The latest numbers showed the economy expanding faster than expected, raising questions about how soon the Fed will pivot on interest rates. Consumer sentiment. Despite high interest rates, consumer spending remains resilient, though credit card debt is starting to creep up, a potential red flag for future spending trends. So, what should traders and investors watch for next week? Here's what's on my radar. Earnings to watch. Next week, we'll get reports from major retail companies, which will give us insight into consumer spending trends. Keep an eye on Walmart, Target, and Home Depot. If they show strength, it could signal continued economic resilience. Economic data releases. CPI and PPI inflation data will be critical. A cooler-than-expected report could fuel a market rally, while a hot reading might spook investors. Retail sales data will tell us how much consumers are spending despite higher interest rates. Federal Reserve commentary. Several Fed officials are scheduled to speak next week. Any hints about rate cuts will move the market, so stay tuned for their comments. Technical levels to watch. The S&P 500 is approaching a key resistance level at X. If it breaks through, we could see more upside. On the downside, support sits around X, so if we dip, that's the level to watch. That's a wrap for this week's Market Pulse Weekly. The markets are in a crucial phase, and next week could set the tone for the rest of the quarter. Make sure you stay informed, and as always, do your own research before making any investment decisions. If you enjoyed today's episode, don't forget to subscribe, share, and leave a review. I'll be back next week with more market insights and analysis. Until then, trade smart and stay ahead of the curve.